Well, hello folks, I'm LA Little and this is your daily NeoTA wrap. We take a look at these markets and we always do it from a neoclassical perspective, asking ourselves just one question: what happened today and what does that tell us about the coming days? I do the show 4 times a week. I do it Monday through Thursday, broadcast at or before 10 o'clock Eastern Time. Also do a show on Sunday. It's a little bit broader view, looking at weeklies and monthlies. And you can subscribe. Content's pushed, you'll be notified. Just you can do that on YouTube. I last night looked at the markets and said, I think that we're going to get a bounce out of this, and I was premising that on the dollar, but we didn't get the bounce. The dollar didn't get a bounce. Dollar was down again, down another 0.5%. That led to further declines in the indexes. Also in overseas markets, they struggled, although Germany, France held in there. We'll take a look at those. The bottom line here is, this market's been trying to break out, can't break out, still range bound, and it finally gives it up. And today, we actually did some of the damage on the downside, saying, hey, this still is range bound in all markets. The Russell, the S&P, the NASDAQ, the NDX, they came back, broke on their bullish test, so forth. Wasn't much green on the boards. I mean, you had oil break out today. That one got over the highs, but I suspect it's probably just a squeeze and it's going to turn around. I do think this dollar is about to bounce, and we'll look at that next, and we'll start actually with the dollar. So looking at the dollar, we need to look at it on a weekly and a daily perspective. So it's into this bar, and you've got the volume expansion now into the bar. Now, it can make it to the end of the bar. In other words, it can come all the way down 24.43 and do the complete expansion on the way down. And make that range pullback a big one. It's already done its ABCD structure on the downside, and if I look at it on the daily, it goes under, back, over after an extended move. That's a 2-bar reversal into support. I suspect it's not going any farther, and you're actually going to see the bounce start tomorrow. If that's true, that's going to put pressure on the commodities. And actually, we had pressure on the commodities if we look at the gold market today, and we'll try to take a look at that too. But this thing will bounce, put the pressure back there, take some of the pressure off the European markets like I talked about last night. They're going to get their bounce. These markets are going to turn and head back up tomorrow probably. The emails I got today, I got a number of them, and they were all about, are we crashing? Is this it? Folks, when this thing's crash, it's going to be an amazing sight because, we're just coming off the top. I mean, I can't even imagine a crash. Can you imagine a 20-30% crash? Maybe everybody just expects it and they're just fearful of it or something. But if I go over here and look at this, we just made a new high. I mean, we're 4 days off a new high. Or 3 days past. You don't get crashes off of highs. I mean, you get pullbacks and then eventually set up a structure to get the crash if it's ever going to happen. But it's a little premature to start, freaking out and thinking that, this is the end. It may be a top, but you won't know that for a while, and it won't happen for a while. I mean, you don't get crashes off the top. I don't think I've studied a lot of crashes. Years and years, I've looked back to 62 on the S&P, for example, and looked at every pullback where it broke a swing point on an intermediate term time frame. That has the potential for a crash. You have to have that to even have a chance at a crash. And in all those cases, there wasn't one that came straight off the top. So, we've had some decent pullbacks straight off the top, but certainly not crashes. All right, so let's go through what we typically do here. Let's go through the S&P. So the S&P, I wrote a piece, and I don't want to belabor the stuff that I write, but if any of you do enjoy reading some of the material that tries to take a little bit of a broader view and is not all this hype, I talked about a roller coaster market, right? And said, hey, the buy and hold crowd, it's not going to work for you right now. And you need to change your tune a little bit if you want to try to make money in this market. I've said it there. I said it again in this next article. I said that the U.S. market's no longer in control. I've talked about that with you. They're not. And it's not going to be a straight up move anymore. It's going to be a yo-yo. It's going to be a series of ups and downs, backs and forths, right? It's going to be this kind of stuff over and over and over. Why? Because the market can't move up. It has no catalyst to move up. You got the earnings that don't support it. You got economics that don't support it. You got a dollar that doesn't support it. And you got Fed still talking about raising rates. Need I say more? This thing is not going to get some sort of sustained leg higher. At best, worst case, it's just so simply roll over, right? Because it can't go higher. I mean, that's the worst case, and it's possible. I've been telling members repeatedly for a while now that we have to keep a small footprint, right? Because right now things are dangerous. And not so much dangerous as much as you're just not going to make money in these markets right now. You're going to get thrashed around. And, if you're going to keep any kind of reasonable stop, you're going to get stopped out a lot. And that's how you get thrashed. S&P pulls back, volume expands. What does it do? There's nothing here. I mean, if I go back and I look at the weekly has a takeaway bar. And so assuming we close down here or below, it's a complete takeaway, otherwise it's a partial. But the weekly failed at the highs, but it had more volume. So I don't see the S&P really telling us all that much. NASDAQ, if we look at it, made a high this week, has been selling off ever since, or I think that was this week. Yeah, it was Monday. So it makes the high Monday, sells off ever since, down about, I don't know, it's about 6% probably. What is it, 51 down to 49, so it's 100. 5%, 2%. It's not but 2%. I mean, it's like nothing. So you're down 2%, you're off the highs, you got volume expanding. The thing that's most important in this one now is that you finally broke the bullish retest regen. And for those of you that are new, that don't know what I'm talking about when I say something like that, you had an ABCD structure up, that completed, right? Okay, so you expect a pullback. Where's it going to pull back to? Well, the pullback, you always look to see how it comes back into the prior swing point high, the one that it broke. So it breaks it, comes back. What is it going to do? It's going to try to hold it and regenerate higher. That's what we call a bullish retest, because it was bullish direction. It's a pullback. That's the regenerate attempt back to the top side. If it fails, what does that tell you? And this one did fail. That doesn't say anything about we're going to crash, we're going to go down. It simply says that that trend that was up, right, no longer is up. It's sideways. In other words, you have to expect this thing's going to trade sideways for a while. Then the question always is, okay, if it's going to trade sideways, how far can it go? Well, it's back into the big breakdown bar, so you certainly could get the bottom of the range. And actually, that's probably about the biggest part of the range there. Actually, if I expand it, it's really about here, right? That's pretty much the range. So you could come to the bottom of the range. What do you do if you come to the bottom? Well, that's where all the swing point lows are. That's where it gets a lot more interesting. Now, if it comes straight away, it's almost guaranteed to hold those, because it's going to be exhausted by the time it gets there. So again, you have to look at it in the context of what's happening. What did the market tell us today? At the top of the show, I always say, what did it tell us today? What did it do today? And what does it tell us about tomorrow? Well, it did this. It got underneath it. And it got underneath it with volume fairly far. That tells me this thing, just like we've talked about, is going sideways. It's not going up anymore. And it's going to take it a while to kind of regenerate and try to do something. So it's back in the range. If we look at the NDX, same story. NDX is back in the range as well. And I didn't show you on the S&P, I mean on the the composite, but the composite goes over, back under, right? So it's going to fail to break out on the weekly. Let me go back to the composite and show that. So you had the potential, oh, well, the composite didn't have it. It was just the NDX. The composite has the takeaway bar like the S&P, right? Here's the takeaway bar. So if we go back to the NDX, you know, the NDX on its weekly now was trying to break out, fails to break out. Looks like it's going to have more volume though, which is a good thing actually. So on the NDX, that part of it's good, but the bad is it comes back, takes out the retest regen as well, back underneath it, right into the bar. Where can it go? Well, take the range. It can go the whole range, so it could come all the way back to here. Again, I don't think that's going to happen because of what I said at the top of the show. And finally, let's look at the Russell. Now the Russell looks damaging, right? Why is that? Well, it broke multiple swing points here and got some, you know, juice to the downside. Broke them yesterday. And if you're trading the Russell and you break, you got to come out. You know, yesterday was your come out trade. You have to come out of that thing if you're holding it long and you're expecting it to go back up, right? If that was your trade. If it's on this time frame. Because when it breaks these, your probabilities go down hugely, right? That it's actually going to go up, and they increase hugely that it's going to go down. And so you don't want to sit there and hold this thing if that's the case. And so what does it do today? Comes down, expands volume, everything expanded volume today. What is it doing? Well, you have to look at the weekly to see what it's doing, and what it's doing is it's coming back for the retest regen, right, on this swing point high. It's done it once. Probabilities are decent there. As it comes back again, the probabilities go down. It's almost a coin flip now. A little bit higher, but not much. So again, S&P, Dow, NASDAQ, NDX, all of them back in the range. This is the only one on this time frame not back in the range. The others never got out of that range. That says, you know, here's the last one that's traded out of the range, still out of it on a weekly. If it comes back in it, that tells us on this time frame that you have to expect it's going to go sideways as well. If it, well, I shouldn't say if it comes back in it. If it breaks underneath the bullish retest regen. So if it gets down in here somewhere, right, that's what that would be telling us. Okay, I spent a lot of time, and the reason I did that is, you know, I got a lot of emails about people freaking out about the markets. Well, I don't think you have to freak out about the markets. You're getting a pullback off the highs. It's normal. And especially in this market, it's normal. I've talked about it being normal. I've told, you know, countless times I've said this market is not going to run to the top side. What's going to run to the top side is overseas. But the overseas markets, as we've seen, are doing pullbacks. I don't have any questions tonight, so I'm going to concentrate on that when I come back. I'll be back. We'll do that and kind of wrap it up. See you in a sec.
Learn how to trade with the Trade with LA service provided to you by TA Today. This service includes daily portfolio and comments that are emailed to you before the market opens each morning. We provide a daily view of the markets and a model portfolio you can follow even if you work another job. Every weekend, LA records his weekend broadcasts that gives you a synopsis of the week and a prognosis of coming weeks. You will also have access to our Teach and Trade room, where LA provides day trades and teaches neoclassical concepts throughout the trading day. To get started, go to our homepage and click Trade with LA.
Okay, as I come back here, I was going to take a quick look at the EM. Now, the emerging markets, more risk-based, right? A lot of this is in Asia. Asia had a huge run. This thing did the same. Now it's coming back. Volume expands today. They're starting to take people out, right? People jumping ship. Again, I think these things are forming their ranges off of a huge move up. And that's true here, and it's true in other markets. If we look at the frontier market, this one even more volatile. If you look at it here, it doesn't look so bad. But if you pull it back and look at the weekly, this one's in pretty bad shape. You know, the key here is what's happening in the currencies. Currencies, the euro pressing higher again today. that press, now it's up to 110.75. Again, if we come to the weekly, that high here, 110.54, we're at 110.60, excuse me, 110.37 is the close, and this low is 110.33, excuse me, 110.31. So you're right into what is probably the toughest spot to get over. And you've done it on a straight up move when you look at it from a daily chart. And so that suggests to me that we're probably going to see this thing at least backfill. You know, and in that backfill, if I put that in, you know, you'd have to think it's in this little area. So you've got the zone up here, right, where it's at and it's trading at now. You've got the backfill back to basically where this bar started from. Now, you know, this has been a huge move down. There's nothing to say that it can't get even higher up into higher resistance zones before it's over. And if you remember, and let me pull over the monthly chart, this thing broke down from about 119 if I remember right. Yeah, it was about 119.50, right? That's where the swing point lows were on the weeklies and the monthlies. And so, you know, a bearish retest regen would come all the way back up here. But this thing is so weak, I don't think it's going to get all the way back up there. A better chance is to get back up in this 111 area, which it's trying to trade into now. On the monthly here, it's the 110.31 as well. So that's the euro. That's what's putting pressure elsewhere. But when I look at this, you know, on the daily time frame, let me go grab that chart again. When I look at it on the daily time frame, it's coming up into the first swing point low after an extended move. My guess is tomorrow it's going to try to push into that low. That number is 111.01. It's going to try to push into it and probably pull back off of it. If it does that, I expect we're going to see the other markets work higher, the equity markets. The yen actually did that. You remember yesterday we looked at the yen failed, came back. That was kind of what I thought the FXE was going to do today, but it looks like it's going to extend a little bit more. We looked at the dollar. We got the reversal 2-bar setup there. I promised you to look at oil. Let me go grab oil. Just a second. Let me get that chart. Okay, so the oil market, so it gets over the swing point highs. There was a swing point high, just fell off the side of this bar. So it's over these swing point highs, a clean breakout. And if I look at it on the weekly, it's coming into this high. That number is 20.29. It's traded at 20.51. So let's see if it can close over it. Doesn't have the volume, but if it gets over it, it can try to push to the next one. And that looks like about 22.50. So all continuing this straight up move, but you know, this is just a big bounce off of a big move down, a huge move down. It's a normal occurrence, you know, where a market gets hammered and then bounces big, right, percentage-wise, and that's what's happening here. I don't think it's anything more. If we look at the bonds came in. This is another reason you should think this thing's going to try to reverse tomorrow, and that is that the bonds came in to this big bar, right, the big bar down, volume not as heavy. That's a reversal, going to skyrocket back up is what it's going to try to do. How far can it get? Well, it can come back to test up into here. Actually, you got a swing point low here, so the test on the bonds will be this one on the way back up. So that's the bonds, but it does look like they're going to try to bounce tomorrow. And I said something about gold last night, thinking it would trade off. It did. It gapped down, never got a chance. This thing's going to come back in and test again. 1287, got to 1296, should get into it tomorrow. And tomorrow's Friday. Gold sometimes gets just slammed on Friday. So if you're a gold bug, you want to see this thing hold tomorrow. You don't want to see it get into this bar. If it does, it's going to try to go all the way to the bottom again. And man, how many times have we seen that in gold? All right, let's go to the world markets and wrap this thing up. So I've been talking about the world markets, in my opinion, or what's driving the markets. So let's start with Europe, because that's the biggest trade right now, or the biggest tell. The CACs. Okay, the French CACs, remember we talked about it was going to try to come into this Let me get that clean again and do it again. We talked about it's going to try to come in and do a bullish retest regen, and it does. It comes in yesterday, it comes in hard, not as hard as the breakout, but hard. As it comes back in, right, today we get a lot of volume, it ends up a doji, but it's still inside there. That tells me two things. One, we're probably coming down here again. So this range trade that's going to set up, if this is the low, this range trade is going to come down here and test again probably. So once it bounces, you have to expect it to come back again. So in other words, I don't expect this range that is set up, if this is it, to go breaking out to the top side before it tests again to the bottom side. So that's the first takeaway. The second is it actually held. Even with the more volume, it held. That tells me that it's probably going to hold and try to shoot back up to the other side. If I look at the DAX, and the DAX is saying the same thing, the DAX goes under, back over, has less volume. It's not really a two-bar reversal. It's not that far in terms of extension, but it is an under-over, suggesting that it's going to try to trade back to the top side. If I look at the other two markets, Hong Kong, the Hong Kong market has tried to start pulling back, and I lost all my quotes, and so I only have a few in here, but you could see that the Shanghai market pulled back a little bit as well. And for my friends in overseas markets, subscribers, Toronto pulling back, doing a retest, regen, still holding. In the all ordinaries, the Australian market, that one is just a huge spiky range. I don't particularly like the way this market looks right now. If we look at it on the weekly, it looks to me like it is going to come all the way back into this high before it's done. And so, you know, it wants to come back and test, but you know, right now it's very spiky, and unless you're, you know, long term, you're going to get thrashed just like in our markets. And for my friends over in India, let's look at India right quick. Now, India's been testing the lows, gets under them here, does the retest, regen bearish, and is extending to the backside. That's not good for that market. Now, what I've talked about before there, and I'll repeat one more time, is I still think it's going to try to come all the way back down into this area. If it does, that's going to be a great buy, so keep it on your radar. It's going to take it a while to get there, though. All right, so that's the wrap with respect to those markets. Going quickly back to our markets and saying what's going to happen. I think I've underscored it already. My expectation is tomorrow you're going to see these markets once more find buyers out of nowhere. It's almost like the Fed finding money out of nowhere. They're going to find some buyers. Buyers are going to come in and they're going to, you know, bang this thing back up the other way. Now, the bad thing is that we're at the top of the range. Let's look at it again this way. We're at the top of the range. There are the structure for a much larger decline is in place. It just needs to get down there. In other words, you've got lows down here which are on an intermediate and now will be a long-term time frame. This same low will be a low on the long-term time frame. So in other words, if this range breaks and we come back in, right, and just assume this takes, you know, we're talking maybe 2 months. It comes down, you know, it mills around, maybe not that long, maybe a month. Mills around, eventually, you know, gets enough strength and breaks these. So it breaks dailies and weeklies at the same time. Then that can propel you all the way back down to here. And if it comes down here and it breaks this, that's when you've really got the crash situation, right? You've got the structure in place to let it happen. We're a long way away from that, but that structure is forming. I've said it before and I'll say it again. Now, just because you have the structure, though, does not say, you know, it doesn't tell you that you're going to get it. It's not a sufficient condition, it's a necessary condition. So keep that in mind when you're looking at these markets. Keep it in mind, you know, the structure is there. If things do get ugly, they can get real ugly, and they can get real ugly fast if that happens. We'll have to monitor it, and that's what I'll do. All right, folks, have yourself a great night. You know, don't fear the worst here. I don't think this is the time to to just freak out on these markets. We didn't get the bounce today. The dollar did not bounce. I think the currencies are the key here. I said that last night. I still think they are. The dollar's set up to do the bounce. If it does, the equities will bounce with it. Have yourself a great night, and I'll see you Sunday. Take care.